So welcome to our class today on the statement of cash flow. Hold on, yeah, I'm trying to share my screen. Share. So you can see my screen now, right? Can you see the
Yes,
slide screen?
yes,
Okay.
but it's still, it's clear now.
Okay. Thank you so much, Bu Anita, and also a very good morning to all students and friends in Indonesia. Okay, so the title for our class today is Understanding the Cash Flow Statement from Concept to Decisions. The most important thing that we need to understand when we want to study on the cash flow statement or want to analyze a statement of cash flow statement or laporan arus kos, kas, sorry, not cost, kas, cash, yeah. We need to know or understand the concept of profit and also cash. So a company can look profitable or be profitable when the income is greater than expenses, right? So it shows that the company is profitable, is doing fine or okay. However, if we look at the cash position of the company, if it is in a downward trend, it seems to suggest that the company is not doing well. So it contradicts. So the company can be profitable, but it can also be cash poor. Bisa miskin, ya. It's very important for the company to ensure that they have cash because this cash will be used to pay their employees for the salaries, yeah, and also to pay the suppliers for all the materials that is being purchased from the suppliers. So, which means that cash is very important for the company to make a payment, as well as the company will receive cash from their customer, and also will receive cash upon any investment made into the company. And the company can also be an investor where they need to use cash to invest in asset purchase or in other companies' shares, for instance. So the cash is actually the heart of the business where um, I know that now the trend is cashless, right? Yes, it is cashless. Physically, we cannot see the cash, or we seldom see cash now because the transaction is made by credit cards or even debit cards or even through online transaction, right? Bisa dengar kah? Tak apa-apa tu. So uh, in any businesses, the cash flow into the company and the cash outflow outside the company is very important. So it needs to be properly managed or reported at the end of the period. Okay. So in the cash flow statement, it would tell us how money or cash uh, move into and outside the company, move in and out. So cash inflow and outflow. So every business needs to provide the cash flow statement so that the users of accounting information will understand how the company or where or what purpose the company receiving cash and also spending the cash outflow out of the business. So the in and out of the business is the flow. Yeah. So we are going to look at that today to understand cash flow statement, and we are not going to touch so much on the preparation of the cash flow statement as what Bu Anita mentioned just now. Most of you had actually undergo the cash flow statement topic in your study, right? So we are going to go very fast on that part, but we're going to discuss perhaps more on the interpretation of the cash flow statement on the company's ability to generate, to use, and also to sustain cash. So our learning goals today is that by the end of this class or session, you would be able to explain the purpose and importance of the cash flow statement, and also to understand the structure and classification of cash flow very briefly. And the preparation and is a very minor part where we're going to just briefly touch on the indirect method of preparation of the cash flow statement, and also the interpretation of cash flow statement um, using the two methods, and also finally to analyze the information in a cash flow statement in assessing the organization liquidity and also financial position. Okay, so the cash flow statement is a statement, one of the important statement in accounting record or report or financial statements. We have balance sheet, we have income statement, statement of retained earnings, and cash flow statement is one of the main financial statement which actually shows the company's cash inflows and outflows from operating, investing, and financing activities over a period of time. Okay? So the first question is why cash flow matters. Yeah, we know that in the cash flow statement, it shows the information about the flow of the cash from operating activities, investing activities, and also financing activities. And cash tells us the true condition or financial position of a company, where profit is on paper, and without cash it shows that the company is having some issues or might be facing issues in terms of liquidity and also solvency. And I hope that we are clear by now that profit is not equivalent or same as cash, yeah, because in the preparation of profit, where we use the accrual basis in order to come out or derive to the profit line in our income statement, where the revenue or the income is being realized even though there is no cash receipt, right? Not necessarily if we are following the accrual basis. But if a company is using cash basis accounting, then the profit is equivalent to cash. But not in normal operation of big companies and also listed companies, we are required to use the accrual basis accounting. Is the standards that we need to follow, or the principles of accounting, right? So, and so does for the expenses, even though the company have not yet make a payment, but the expenditure or the expenses is becoming due already, like interest, like salaries for that particular period. So it is still being considered as an expenditure, even though cash is not involved. So does for other items that is non-cash related, is also being considered in the preparation of income statement. So the profit that is being shown is not the same as the cash that the company has at that at the end of the period that we are reporting. Okay. So the key questions like where did the money come from? We can find that in the in the cash flow statement. And how was it used? We can also see that in the cash flow statement. And what is left, the balance, right? Or the changes in the balance from the beginning and ending, we can see that clearly in the cash flow statement. Okay. Um, there is a condition where the company can report profit at the end of the period, but still having cash issues. Yeah, because of profit is not equivalent to cash. That's the answer. And cash flow is actually showing the actual cash movement. Yeah. And it shows the ability of the company to pay salaries and to pay the suppliers and loans and also dividends to the shareholders. So the cash flow statement would help to answer these three basic questions. And therefore, cash flow statement matters, or cash flow management is very important for management of, and also for investors and creditors to know about the uh, cash movement of the company. So the users of accounting information would be interested to understand our cash flow statement in order for them before they can make such a decision whether or not to continue investing in the company, whether or not to give the credit terms to the company in the case of when the supplier want to give extra credit to the company. So they might want to look at the cash flow statement. Bankers as well, yeah. So bank or the third party, when they want to give out loan to a company, they will request a cash flow statement to see the ability, the potential ability of the company to pay back if it's an investor. They want to see the ability of the company to pay them cash dividend, for instance. But for banks, they want to look at the ability of the company to be able to meet uh, the agreement or the installment or the payback of their loan in the future. So they will be looking at the cash flow statement to see the potential ability of the company to pay back. So that's for the suppliers. Okay. Are you guys okay out there?
I believe so.
Okay. Diam saja kan? Okay. So now we come to the structure of the cash flow statement. So as mentioned, and as all of you already aware, I hope most of you knows or have seen example of cash flow, the real cash flow statement. And there are three key sections in cash flow statement, which consists of operating activities, the first heading, and then we have the investing activities, followed with the financing activities. So in each of the headings or section, uh, we have the cash inflow and cash outflow. So that's for the cash flow from investing, cash inflow, outflow. Then for financing as well, cash inflow and outflow. So what are the examples of cash inflow for operation activities? Any idea? Teman-teman?
Teman-teman, Bu Fatia asked this question.
Yeah. Any example of cash inflow from operation activities?
Any example of cash inflow operating activities? M- Mungkin kalau malu, you can like
Yeah,
write on the chat room.
ada jawapannya. Ya, apa kalau tidak ada kita lihat ya.
Okay.
So example of the cash inflow from operating activities consists of cash that company receive from customer. We get the cash, right? So the company get the cash. So cash inflow, in itu masuk ya. So other examples are the interest or dividends that the company receive other than the operation activities is being parked under headings of operation activities. This is quite complicated, where students might be confused why cash inflow from operating activities also include interest and dividend received. So that is the requirement or standards that has been followed by the companies, especially the listed companies. Yeah. And cash outflow includes the payments to suppliers and employees, and also interest paid or tax paid to the when we pay outside, when we pay the cash out lah. You just imagine a company like yourself. So when you receive money from your mother or parents, you put the money in this pocket, right? Then you use the money to pay for goodies that you purchase or you buy. Then it's outflow out of your pocket. Then we have the investing activities, the second activities in the cash flow statement, which include the sale of our asset, and also if we don't no longer uh, want to invest, so we want to buy back, then we get back the money, something like that, right? And then cash outflow is when the company make an investment. So if we invest, we need to pay out, right? And or if we invest in fixed asset like machinery, we purchase systems, then that is what we call investment. Investment is helpful, yeah, it's not a bad thing. Not necessarily all cash outflow from the company is bad. No, we need to have this cash outflow so that we get our employees to work for us, then our company can grow, or we really need that investment to be made in order for the company to continue operating. Yeah. And that is investing activities. Normally, we invest in a huge amount of money, but it's not a regular things that we do every month or every year. Perhaps once in a year, or once in 2 years, we make a big investment, right? It depends. It depends on the size and the type of industry that we are looking at. But operation is very, the transaction is very, the flow is very active, of which that is the heart of the company, right? The operation activities is the main business of the company. And the third heading for the cash flows is the financing activities. When the company need extra financing, then they will issue shares, perhaps, yeah, or issue bonds. So when they receive the money from the shareholders upon the issuance of shares, then cash inflow. But when they pay back the to the bondholder, or they pay back in terms of dividend, is a cash outflow. And we come to the preparation of the cash flow statement. There are two methods: direct method and indirect method. So direct method, as the name suggests, it's directly showing where does the cash comes from, the cash inflow, and where does the cash goes out, cash outflow from which items, especially in the operation activities. Yeah, it shows the cash received and payments directly, cash received from customer, cash paid to suppliers. So it's directly. However, indirect method, we in the operation activity, we does not have the cash received from customer, cash paid to suppliers, but instead we will be using other statements like income statement, starting from the profit, the net profit. Then we need to make adjustment or reconciliation back, and the differences between the beginning and ending balances of the current asset and current liability is actually contributing to the flow of the cash. Yeah. So the indirect method needs the information from the at least the two statements, the income statement, yeah, where we get the net profit, and we need to make an adjustment or amendment. We need to add back the non cash item like depreciation. We add that back. Then we have the changes in the current asset and current liability, which need to be added and deducted. Then we get the cash flow from operating activities. That is indirectly. But directly, the direct approach or method in the operation activities, we know directly cash from received from customer, how much cash paid or received from cash received from other from the interest gain, how much, and then cash paid to employees, cash paid to suppliers, cash to pay cash paid for the interest expense, how much. So we know directly how much. But the indirect approach, the changes in account receivable, changes in account payables, the creditors account, yeah, and also the changes in other current asset and current liability would be used in order to come up with a cash flow for that particular period of time. But having said that, using either direct method or indirect method, the cash flow from that activity should be the same, yeah, but only different method. Okay, but there are pro and cons for each of the method. If you are using direct method to prepare your cash flow statement, you'll be more transparent because we know directly where does the cash receive and where does the cash goes to, and it is more user friendly. Your users might understand it easier, and it can shows the cash flow trends easily over the years to do a comparison. It's easier, and it is aligned with the cash management because we know the cash in, cash out from which of the items clearly. But in order for us to prepare the cash flow statement using direct method, we need more information. It is more tedious actually than if we are using the indirect method. Indirect method is simpler. Yeah, accountant would agree with me on this. And if you are a student and you have actually tried to come up with a cash flow statement using the information given to you, um, the information that is gathered from the income statement earlier, if you are using direct, yeah, is not sufficient for you to uh, to come out with the cash flow statement or to prepare the cash flow statement using direct method. Why? Because you need more information. You need to be provided with more detailed information about the cash, which item actually being paid by cash, and there are a lot more information which would actually confuse you more. But if you're using direct method, it's just the changes in the accounts, the two statement that you have prepared earlier can be used to prepare for the cash flow indirect method. So it is simpler, and uh, it is it is standardized between years and also between other companies because you are referring to the quite similar item from the other two statement. But if you are using the direct method, it is lack of standardization, of which it kind of like it depends on the company's practice and so forth. Yeah, it's quite difficult. It's very tedious, time consuming. It requires detailed information. Then only you will be able to prepare the operation activities section in your cash flow statement. Being a student, yes, perhaps the question in your tutorial or during your exam is designed to make you um, doable. But in real life, oh, it is very tedious in coming up with a cash flow statement where when when we are doing the direct method, we also need to do the indirect one just to check. So when you did that, perhaps you might come across a very difficult situation, or it's easier to pay to prepare the cash flow statement using indirect, frankly. But you can try later during your internship or your real if you got a chance to look at the real cash flow statement, then you might understand what is meant by using an indirect method for operating activities is easier. Because we integrate the financial statement using indirect method, we use income statement information as well as balance sheet information. This is true when you have the ability or competency to prepare for the income statement properly and also balance sheet properly. Businesses need to have that ensured, and that's why we have audited to check all the statement was prepared fair and correctly, right? However, the indirect method also have some disadvantage where it lacks transparency. There is a potential of misinterpretation when reading the cash flow statement, and yes, undoubtedly that it is quite difficult in identifying trend as compared to direct method. We know directly from which from which sub activities that actually contributed to the cash inflow. But when we are using indirect method, it's quite difficult for us to make a comparison, especially between years. And there is a lack of alignment with the real cash management, where the information is coming from the changes instead of the real the control, the driver or the items that need special action. Sometimes if you want to do a cash management, if you know specifically which line of item is actually signaling to potential issues, it's easier. So there is a pro and con, but the more popular method would be which one? What do you think, direct or indirect method? You can type your answer in the chat box, in the comment box there.
Maybe you can repeat the question, Bu Fatia, but perhaps that the student.
Oh, sure,
Yeah.
Bu Anita. Okay, as a student, do you like direct method or indirect method? That's the first question. Direct or indirect? Just type direct or indirect. I cannot see the answer. Bu Anita can help perhaps. Is there any
Okay.
answer? Any feedback from the student?
I believe not yet.
Oh, teman-temannya nggak bangun lagi ya?
I'm afraid that. Oh, come on, guys, answer the
Just
question,
answer,
please.
direct or indirect? Which one do
That
you
would be
think?
so easy, just direct or indirect. If you
Direct?
answer in a wrong way, that would be okay also.
There is no right and wrong answer, by the way.
Come on. Oh my god.
Nggak ada answer ya, semua sudah pandai ni.
There's a one answer, Bu
Great.
Fatia.
Yeah.
Finally. Gania Mustika Hayati. Indirect method, Bu.
Oh, indirect method, yeah. Okay, great, great. At least, you have a choice. You have chosen that indirect method is better or easier for you, yeah, because different accountants later or different company might have different preference, right? It depends. It depends. So if you have actually learned about cash flow statement, as what Bu Anita mentioned just now, by now you should be able to choose which method is easier for you. It can be difficult for others, right? Because human are not homogeneous, right? So okay, just one feedback, yeah, indirect method. Okay, so it is actually both methods, by the way, are acceptable. It's not wrong to use direct, or it is not of lack advantage if you are using indirect. No, but most of the companies would choose. This is through facts that we have found from prior studies or from prior report that indirect method is more popular. It is commonly used, aligned with the International Accounting Standard 7, and it is being preferred by many companies because it connect the income from the income statement, right? And also the balance sheet, the balances in the balance sheet, especially in the cash in hand and banks item, can be explained by the cash flow statement here. So that there is an interconnected between the statements. If we are using the indirect method, can also be justified. But not saying that direct method is, yeah, it is less popular because it is more complicated to prepare. But for cash management, direct method is best. So I believe companies must have a system to track your cash in and out from the company, right? They need to have that because they need to prepare the cash accounts and also the tracking, and they will be doing all the reconciliation of the every month. Yeah, it's a regular checking from the banks and cash in banks and also cash in hand. They are all cash. So cash does not just mean the paper money and coins. Yeah, it also includes other cash equivalents, checks, like travelers check. What else? The commercial people, uh, the mode which is easily being transferred in the form of cash without difficult procedures. Okay. Okay. So let us look at the example of the indirect method. So let's say you have a net profit of 100,000. So if you're using indirect method, in the income statement shows 100,000, then the depreciation in the income statement, you have depreciation 20,000. But depreciation is a non-cash item, yeah, because that you need to add back that depreciation. So your profit is overstated in terms of cash, something like that, by 20,000, because depreciation is non-cash item. So you add back, yeah, so it becomes 120,000. And then what else that you need to make adjustment is on the balance sheet. You look at the balance sheet changes in non-current asset. So you look at the changes in current asset in the balance sheet, and also changes in current liabilities. So for instance, if you have the changes of the inventory, let's say last period inventory ending balance, yeah, or the beginning balance of the year lah kata. The beginning balance is 8,000, but the ending balance now for the current year that you are preparing the cash flow statement, yeah, in your balance sheet it shows inventory of 18,000. So 8,000, 18,000. So there is an increment in your inventory of 10,000 dollar or rupiah. So that 10,000 increment shows that you have more inventory in hand, right? What does it tells you? You're not able to sell your inventory to customers. So you need to minus that. You're not getting that money by 10,000. And then look at payables. There is a decrement in payables. Payables, which mean that current liability, something that you hutang, yeah, you are delaying paying, something like that. So if there is a decrease in payable, which means that you have make a more payment, yeah, as compared to the beginning period. So you need to add the decrement in payables by 5,000. So you're paying more than that for this year. So you add back that to the net profit and blah, blah, blah here. You get the net cash from operating to be 105,000 rupiah. That is so small, right? The figure, or dollars. So you look here, you need to adjust the net income for accruals. That's why you need adjustment, and non-cash charges to get cash flow. So that would translate to the cash flow uh, translation or cash flow items in for the operating activities. So for the financing and investing activities, you are using direct or indirect. There actually is the same. The only different is when you're using indirect method, the only different section is the operating section. The rest are the same actually. But you can double check that for investing activities, the changes in the non-current asset, the fixed asset, equipment, property, what else? Yeah, the all vehicles that changes in the non-current asset would reflect the investing activities for that year. Yeah, in cash terms, and also the changes in the non-current liabilities for the financing activities and equity. So this is a full example of the cash flow statement. Yeah. So easiest way, cash flow statement has 3 headings. If you have operating of this much, positive 105,000 rupiah, and then maybe rupiah million. Investing in a negative form, which means that the cash outflow for investing activities is more. Then if you have financing 20,000, the cash inflow is greater in financing activities. So the net cash increase in cash, you add up this together, plus, minus, plus, which shows if it is a plus, it's a net increase in cash. But otherwise, if your cash outflow is greater, then it's a net decrease in cash. Normally, a net decrease in cash signals bad thing. Or if you have a trend of changes in cash, increase your cash has been positive from you can see the volume of changes. Yeah, if the changes it is increasing but in a smaller volume, which would actually signals that there is some issue. But if you know from which activity, then it might tell you more story to that. Yeah. So there are two statements here, examples: Steve Electronic Supply Incorporation statement of cash flow and XYZ company cash flow statement. So can you tell me, Steve or XYZ company is being prepared using the indirect method? Which of the two statements using indirect method?
Okay, students, you can choose whether it is Steve Electronics Supply Incorporation or XYZ Company. Right, Miss Bufatia,
Betul,
that
betul yang
using
ya.
indirect method. Which company? On the left side or maybe in the right side?
Steve or XYZ?
Okay.
Left or right? Ada answernya?
You can
Wanita?
not yet, but maybe. Oh my God.
Or they didn't understand my question, or?
I don't think that they don't understand the question. Maybe they just, I don't know.
Shy.
Perhaps,
They are
yeah,
shy?
probably they too
Oh,
shy to answer.
shy, yeah.
How about in USM students?
It
Zoom.
depends as well. Yeah, Zoom is very difficult to get participation, but it depends on the batch of students. Sometimes
Mm-hmm.
we got so many. The engagement is so. They can be active as well. It depends on what kind of activity we are doing. If questioning like this, it is expected that it's very difficult to get a response. But if you are doing like pool, or we are doing, because we are using Zoom, I don't have that much experience on trying to do like pulling or a breakout session to break. If the class is too big, sometimes it's also difficult to get participation,
Yeah.
but it depends as well.
Mm-hmm.
Yeah, it depends. And there are those who are really brave enough to unmute and tell that XYZ or Steve is actually using indirect method. Or sometimes they're just typing their answer in chat box. It depends on the preference of students.
Bu Fatia, there's
Ada jawapan?
actually a
Oh!
question answer
Ah,
from Camelia. She answers
Cambodia.
Steve Electronics. Yes, both
Ah,
of them are Steve, belongs to Steve.
okay. Both answer Steve, yeah? Okay, great, great. So, Bu Anita, which one do you think? Do you think that Steve is using indirect as well, like what Camelia and who's the other one? Camelia and siapa ya? What about the rest?
Camelia and Fula Arum. Fula.
Ula,
Arum, maybe that's the
Arum.
easiest.
So Steve. So how do we know that Steve is actually preparing their or prepared their cash flow statement using indirect? When the statement started with net income, we know already that it is using indirect. But for XYZ, if you look at the far right side of the screen, XYZ, we can see that it begins, or in the operation section, it clearly state that cash received from customer, directly saying that cash paid for inventory purchases, general operating and administrative expenses that are exactly or has been itemized or directly for the cash activity under operation. Yeah, that is direct method. But in Steve, if we look at Steve, they started their statement of cash flow with net income, then they add back the non cash item depreciation. Then they got the adjusted net income to be $110. Then they deduct the increment in the current asset, here account receivable, and also increment in the trade creditors. By that March, 20,000 trade creditors is the current liability. Dia terbalik ya. If you look at the balance sheet, there are two sides as well, right? The current asset is on the left side and the current liability is on the right side of the balance sheet if you're looking at the balance sheet in the T format. So any increment in the current asset will be deducted and increment in the current liability will be added back. There's a reason for that, as what we have actually described just now. And out of the operating activities, it's showing $100,000. But if Steve were to prepare this statement using cash flow statement directly, using direct approach, the cash from operating activities also should be $100,000 as well. Should be the same. Using both method shouldn't be different, but only different in the items presented in the statement. Mm-hmm. Okay. Okay, now we come to the most difficult part. I hope you have actually understand or you know what has been presented just now on the cash flow statement, on the approach, on the methods, and now we come to the interpretation of the statement. Yeah. So in general, if you look at the cash flow statement, we look at the bottom of the cash flow statement. If there is an increase of the cash flow statement, or at least is a positive cash flow, where it shows that the cash coming into the company for that particular year is greater than the cash going out, it is actually showing that the company is healthy. Yeah, in general. And then if we look at the individual section, for instance, if we look at the operating activities, if it is a positive operating cash flow, it shows that the core business of the company is doing good, or it's okay, fine, don't have to worry. But we need to be worried, the management of the company and the shareholders need to be a very particular or concerned if the operating cash flow is in negative form. It is not good. Yeah, it seems to suggest that the outflow from the operating activities is greater than the inflow. It is not a good business to continue. But again, they must have a reason for that. So if it is a negative operating cash flow, but it is recovering, it's a good sign. But if it is going to be more severe, then company actually need to find ways, or perhaps new business model need to be designed for the company. If not, if they continue doing the same thing, they might be losing in the market. Yeah. So that's why company would prepare the cash flow statement for internal purposes almost every month, if not every week. But now with the technology, we can get the information of our cash position almost immediately. When we ask what's about our cash position today, are we in a positive position, or we are in a very bad position? So we need to think about how to solve these cash flow issues. Yeah. But a negative cash flow in the investing activities is okay, is fine, because the company is actually spending on investment, or the company is investing lah. So it suggests that the company is growing. But if they allocate so much on investment, but the return of the several years is also not well, then the question of return on investment is a big question mark, right? It's fine actually if we have a negative investing at cash flow, net cash flow from investing activities is showing a negative flow. It is understandable, yeah, it's okay, but it shouldn't be more than a certain percentage of the net income that we generate for that particular year. That is some benchmark that company has in order for the investment to be made. So some strategy of investment would also take into consideration when a company want to invest or not invest, right? For major decision, of course, shareholders will have their rights of voting whether the company should expand, make huge investment, or big decisions such as merger and acquisitions and whatnot. Yeah. As for financing activities, a positive financing would suggest that the company is actually requiring or inviting external, or invited already external, or the shareholders, the bondholders, to pump in the money for the company for whatever purpose. Normally, we have the funding, then we make investment, right? So correct lubang satu
Tutup
dua.
lubang.
Ya, apa? Bu Anita?
Apa tadi ya? Tutup
Ya,
lubang, gali lubang, tutup lubang.
ya gitu. Selalunya begitu. But it need to be done strategically, because we don't want to keep on asking our shareholders to pump in more money, the bidding capital to be increased. That need to be a justified proposal as well when we want to expand, right? When we want to expand to Vietnam, for example, or want to expand overseas or in other island out of Jakarta or out of Malang, for example, want to make another branch in Makassar. So that kind of investment need to have funding. So that's if we have a proper cash flow records, it would actually help the company to further justify and convince the shareholders on that, and also on the return on the investment need to be shown as well. The model need to be reliable enough for them to agree upon. Yeah. So the pattern is very important as well for companies, not for the management of the company, because cash flow management is very important. You if you didn't pay enough consideration on your cash position, we know that cash is king, right? But now we kind of changed that the cash flow is everything, not just king. Okay, so there are 9 cash flow statement green flags by Brian Feroldi. This is just his illustration on the green flags. Normally in textbook, we have a section in the cash flow statement on the red flag of the cash flow statement. But before we deep into the red flag, let us look at the green flag of the cash flow statement. So the first green flag is when the net income is positive instead of net loss. Yeah, net income is positive and it is in a growing trend. So last year is less than this year. So this year is improving or growing. So it's a good sign. So it's a green flag already. And then you look at the stock-based compensation. Yeah, if you have the stock-based compensation to be less than 10% of the net income, it is showing a good green flag, yeah, compensation in terms of stock given to the shareholders. And the third one is operating cash flow from the operating cash flow is higher than the net income is a good signal as well. Yeah, which means that your operating cash activity generated greater than the net income shown in the income statement. That's a very good sign. Yeah. And then if the free cash flow is higher than net income, is also great when you look at the capital expenditure as compared to the operating activities is greater than the operating is greater than the capital expenditure, then you have more free cash flow, then it's better if it is greater than the net income, the differences. And if the capital expenditure is less than 25% of your net income, or that the investment, yeah, is less than 25% of net income, it is a green flag to the company, to the investors actually, yeah, looking at the company, oh, this is good. So we can continue investing in that company. Or if otherwise, you might want to consider to sell your shares to others, right? And if there is a debt reduction in the investing activities section, if there is a negative, not negative, but a trend of reducing the payment that you make to the debt, or acquiring less debt from previous, or the debt is lesser, then is a good signal as well. Or you're paying more, so your debt amount in the that you are owing to the outside is better, then it's a green flag. And if you repurchase your shares, buy back your shares, which means that you have the ability to buy back, you have money, yeah, then it's a green flag as well. Yeah. And if you have the ability to pay dividends, in the cash flow statement shows that dividend is paid cash lah kan, then it's good. Yeah, it's a good signal. And the next one, when the cash balance at the bottom of the cash flow statement, where you have the changes in the cash during the period, if the balance increases, there's one example just now in one of the cash flow statement where cash increases, right? Cash amount increases, is a good signal as well. If decrease, is a red flag, something like that. Okay. But some pitfall, or some common pitfall for the cash flow statement, not just student, managers as well, yeah, confused profit with cash. Why we are making so much money this year? But they are referring to the profit of the company. But they're saying we are making money. But actually, is that really they are referring to our cash position, or they are actually referring to the profitability of the company? Because most of the time we just announcement was made that the company is making profit for the year, and then there's no bonus for the employee because there's no cash. So managers, not just students, confuse what is profit and what is cash. So that is important. That is why the class today started with profit is not equivalent to cash. Yeah. And because profit is an accounting concept, the accrual concept, where cash is the real survival tool for businesses, yeah, and for us as well. We are not saying that cash is everything, no, but cash flow is everything. For position, what do you need to have, or how would you do that? How would you improve your future employees' as an accountant? How would you do that?
Bu Fatia, there's an answer from
Ada.
Yona. Maybe Yona, you can answer your question directly. You just need to read
You read back. Yeah.
the line that you write. Will you? You can unmute yourself and then answer to Bu Fatia. Or maybe I can read the answer, Bu Fatia. Riosa, yes. Riosa said that I would focus on building a financially disciplined culture. Oh my God. Like prioritizing investment that bring long-term value, strengthen cash flow planning, ensure transparency financial reporting, that help the company balance growth with financial stability. This not quite practical. Not too not too practical answer actually. Yes, this is like what is an ideal for the company? Okay, another question from Fula. Maybe you can read from the chat box, Bu Fatia.
Enggak bisa sebab saya share screen tu.
Oh, I see. Okay. I don't remember. Sorry. Fula, another question, another answer from Fula. Fula said that to improve my future employers' cash position, I would spend up cash flow by encouraging faster customer payments, reduce cash outflows by cutting unnecessary expenses and negotiating longer payment terms, and strengthen financial strategy, maybe like through refinancing loans and somehow like that.
Okay, thank you, Bu Anita, for reading the both answer from Fula and siapa tadi? The first one?
Beyonce.
Beyonce.
No, not Beyonce. Beyonce.
Beyonce.
Yeah. It's quite
Beyonce
hard.
and Fula.
Yeah,
To pronounce.
current student's
Yeah.
name is quite difficult to pronounce, right?
Yeah, but it's
But yeah.
interesting. Yeah. Thank you so much, Bu Anita. Yeah, Beyonce and Fula, thank you so much for your answer. Yeah, I think I know where Beyonce is coming from. If we study on management control system, there's 4 levels of control, and one of that is boundary, where what Beyonce's question is coming from strict regulation that we are imposed. That your answer is true in the case of a highly regulated industry like banking, government sector. Perhaps that might be true, but for other types of business, perhaps the answer given by Fula is acceptable. Of which, but Fula gave the first part of the answer when Bu Anita read out loud just now is actually a short-term solution to the cash flow issues. But yes, sometimes our cash flow position can need to be the issue need to be tackled almost immediately, or short-term solution is the best possible action that need to be taken. But we also need to consider the long-term solution, or the long-term recommendation in order to improve the cash flow positions, or especially in terms of improving by doing the other 2-3 things that Fula had listed just now, and also like Beyonce mentioned just now, can also be considered for longer terms. Yeah, that is how we answer to that. How would you improve? But again, in order for us to make a recommendation for improvement, not just in cash flow statement matters, but also in life and also others, we need to really understand what's the issue, or first issue, but if you don't understand how to read the cash flow statement in this case, yeah. So how would you be able to advise your management or employers on this? Can you need to imagine that. That is why for future accountants, for all teman-teman here, it's very important for you to get the basic in hand. When you go out for work, you know, even though with the accounting software packages and what we have account clerk, you to work as an account clerk, right? But you're going to go out as at least an officer, auditor, and then moving up to accountant professionally. In that case, you need to be able to you need to also understand the basic transaction, especially basic principles of accounting need to be in your hand. The principles of going concern, the separate legal entity, the objectivity, the materiality, and other principles. There are 15 or more, right? That need to be actually you need to understand that fairly before going out for your real work. At least the technicality can be learned easily, but the principle you need to understand that, so that you will be uh, seen as competence, not just academically, but also it shows in your the way you actually defend and the way that you answer. Be brave to answer and to give your opinions to your future employers. As accountant, you are almost at the top rank in your organization later, where your opinion matters. As what we have seen, cash flow matters. Cash flow is everything in a company. Okay, so revenue is vanity, profit is sanity, but cash is reality. As what we mentioned, cash is king, but cash flow statement is everything. With that, I thank you, and I would welcome any question from the class. Any
Okay.
question? So I stop
Yes, thank
sharing.
you, Bu Fatia.
Yeah,
Remember, guys, revenue is vanity, profit is sanity, but cash is definitely reality.
and stop share.
Can you stop
Okay,
share? Okay. Okay. You
question.
can deliver some question, to Bu Fatia. And I will report the question, the name that already answered the question, and then the one who will ask the question to your real lecturer in in our campus. Actually, today's class is Bu Hera's class, Bu Fatia. She's
Oh,
the senior lecturer in our campus, and also Bu Intan. Other than Bu Hera, she's the junior one, but they are good, both of them actually. And I'm in the middle. Bu Hera is my lecturer when I study in Brawijaya, and maybe like Bu Intan is I never teach her, but I believe that she's sort of like
Bu Hera is here and Bu Intan is here, or just their student?
is there any Bu Intan here? Or maybe
Oh, it's okay, it's
Yeah,
okay.
I'm
Yeah,
here.
ada
that,
question.
that that's Bu Intan. Maybe Bu
Ah,
Intan.
Bu Fatia.
selamat siang.
Iya, selamat siang. Sorry, I'm late because I have another class in the
Oh,
previous
it's okay, Bu
JJ.
Intan. Ada soalan nggak? Maybe dari
Yeah.
Bu Intan sendiri ataupun dari Bu Hera kalau ada.
Yes, maybe Bu Intan, would you like to ask a question maybe, like, or maybe like student, please say hi at least to Bu Fatia, maybe another question other than cash flow statement, maybe you can ask. Oh, that's from Renita, Bu Fatia.
Renata, wait, I'm looking for the message. Mana ya? Oh, di atas kali ya?
No, definitely on
Kat mana soalannya? Negative investing, I would focus on. Selamat siang.
In an era where ERP system can track cash movement in real time, does it still make sense for companies to use the indirect method? If yes, what technical reasons support it? For example, the way have you find the answer the question, Bu
The
Fatia?
question tak jumpa, but I think I can try to answer. Yes, the help of technology, almost immediately now with all the apps, we can know the exact items. So direct is acceptable, but according to IAS 7, companies still need to prepare the indirect approach in the notes to the account if they choose to use direct method. That's the reason why companies would go straight to indirect method, because they already have that information to be prepared. The requirement of IAS is to use the indirect method. So the direct method, if they have that prepared in the system, normally being used for the cash flow management, and it is actually for internal purposes. But some companies, they decided to prepare the cash flow statement in the main financial statement using direct. It's okay, because both method is accepted. But if they are using a direct method, they still need to report the indirect method in the notes supporting as an appendix. I think that's the reason why companies would rather go straight to indirect method. And yeah, that's the reason why it becomes more popular. But again, it depends on the country that you are reporting to, the stock exchange that requirements. But internationally, the requirement is to prepare using the indirect method, and you don't need to have to show that in the notes to the account. The direct one is not required, something like that. Okay. So it depends. It depends on your company's preference. That's why you need to know you need to know both of the approach. Perhaps later it will change. It's so dynamic, right? But principally, the cash flow statement would somehow explain the cash movement in these three section. And the operations section is the most active one. If it is being able to be captured by ERP and other latest apps, but still, what do we say that? Yeah. Just for reconciliation purposes, as what we have seen for the bank reconciliation statement, this is actually being professionally required. They would they would also request for that. Okay, any other question? I hope I answered the question, but again, you can double check that with Bu Intan later in your class. It is okay to disagree to any of the opinions that we have made here, but again, always check with the standard accounting standard requirements in a country. If you're following international accounting standards, then you should follow the standard, that, especially for companies operating abroad and also listed abroad. So perhaps this is very important for them. Ada lagi soalannya? Saya enggak jumpa. Ini macam jawapan lama-lama jam, oh ini jam 10. Sekejap.
Okay,
Ramai yang dah
students.
live. Sudah habis ya kelasnya?
It is actually like 10, 20. No, actually, still we can still go on, but maybe like Bu Fatia, do you have any other activity today? I mean, like if you have a definitely urgent activity like right now, maybe we can end the class.
Okay. If there is no more question, Bu Anita.
I will ask one more time, maybe. Guys, do
Okay,
you
sure,
have any
sure, sure.
question to Bu Fatia? Maybe you can ask other question than a cash flow statement. Maybe you can ask about the environment if you probably will continue to study in USM or something. Maybe. Okay.
No more question.
I believe that there's no more question, Bu Fatia.
Okay, okay. Bu Anita nggak ada question? Nggak ada ya?
Well,
Hmm.
I don't think so.
Okay.
No need to ask. Just maybe just one question.
Mhm.
How about with small company? I mean, like sometimes the small companies definitely struggle with the financing their company, and sometimes the financing source is definitely from the owners. It's still, like small companies still need to make a cash flow statement or.
Of course. Tapi tergantung ya, Bu. Yeah, the cash flow statement is very important especially for small companies. Because big companies, they have all the templates, they have all the system application, the software package already done for them. But for small companies, especially SMEs, small medium enterprise companies, they need to have cash flow statement, because not just for the reporting purposes, but for management purposes. How do they know that their cash is enough for the next 3 months to come if they did not prepare the monthly cash flow statement? So for small companies, it's very important for them to have this kind of record as well. And that's why, but their cash flow statement is simpler actually, but it depends as well on their businesses. And not just for small businesses at whatever phase they have, those who want to open up a new business need to have the cash flow statement provided before they can register for the forecasted one, yeah, before they can register of their company or of their enterprise to be in existence. If not, they are not. How the authority can know whether they would be able to survive or not? It's unfair for the business, for the owner as well, if they come up with a business proposal without a forecasted cash flow statement. You can imagine how are they going to pay their employees or staff if they only have like 5 staff or 3. But if they are not able to generate enough cash for the first few years of their operation, you can imagine the difficulties that they will face in the future, right?
Especially for small business that run in property industry. I mean, like,
Oh, but in property industry is different.
yeah, it's I
Yeah,
think that's quite
difficult.
challenging, right? I mean, like the cash inflow,
Uh-huh, uh-huh, uh-huh.
it's not that liquid than the some company that maybe
Yeah.
like sell something for daily needed uh, customers. But
Mm-mm.
if you
But they
sell
also
like,
have the administrative expenses that they need to pay, and
yeah,
also the raw material of the when they are property. Yes, their activity will be most of the investment where they purchase land to develop, right? So they have other standards for property accounting, right? So it's a different story. So you need to have another session for property accounting, of which I think maybe we can invite Bu Anita later to USM to talk
Oh my
about
God.
property. Yeah, yeah.
Okay. Still,
Okay.
is there any questions, students, or maybe Bu Intan? If there is no question, I think thank you very much, Bu Fatia. It's so nice to know you, and then maybe like we can chat in another media.
Yeah.
Thank
Keep
you
in
so
touch.
much.
Thank you so much, Bu Anita.
Yes, thank you so much, Bu Fatia. I hope that
Wanita.
the 3 times meeting with Bu Fatia, Allah will grant with the very, very huge goodness for Bu Fatia.
Inshallah, back to you as well, Bu Anita. Sama doanya.
Amin. Oke.
Okay.
Wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh. Thank you, Bu Fatia.
Waalaikumsalam. Sama-sama. Terima kasih banyak.
Uh,
Recording stopped.